Hello and welcome to another update video about ADA. ADA continues to drop further. That would be in line with our primary forecast here. We're going to take a look at Fibonacci extensions in this video. Overall, the general scenario hasn't really changed. We still primarily see the view or see the path that ADA took between the 10th of March and the 15th of April as a leading diagonal in a wave 1. We're now coming down in a wave 2 correction. The question is only how deep is this wave 2 correction going to go? Because there are two scenarios. Don't get me wrong, they are both likely, even though I view the leading diagonal as primary option, they are both very likely. The more I'm looking at the subwave structure, I am thinking about that the alternative is might become more likely. It certainly has a quite high probability. I mean, honestly, if I had to give you between these two scenarios a probability, which is always very hard to do because it's very subjective, honestly, I would give the leading diagonal maybe let's say 55% versus 45%, yeah. But don't get me wrong, they are both bullish scenarios, yeah. So it's just weighing between these two scenarios that we have on the chart. Always bear in mind that Elliott wave allows us to reduce the infinite number of potentials that there is to maybe 2 or 3 scenarios that are likely, and then it's a matter of weighing between them, but not necessarily trading only the primary count. That is a mistake that many people made if they don't understand Elliott wave. It's not about trading the primary count, it's about understanding what are the primary and alternative options that are all highly likely, and then simply look for the relevant support levels and trade reward to risk. Let me just take you through the two scenarios. I have to go to the 4-hour chart for that. We are looking at the chart that started here in December 22. We view this move up as a wave 1 in both scenarios. And in both bullish scenarios, the move up is a wave 1 because it can be counted as a 5-wave structure. The move down is in very clear 3 waves. Okay, so the move down in 3 waves, and the move up was very, very choppy, very difficult, a lot of overlaps in this move to the upside. So the idea is in the primary view that this was a 1-2 setup, which bottomed on the 10th of March, and then here another 1-2 setup. The second option, which is highlighted in red on the chart, is assuming, yes, that we peaked in a wave 1 in February as well, but the move down in ABC was just a larger A wave. This was an overshooting B wave in April, and we're coming down in a larger C wave. And that could come down a little bit lower and would allow for a drop all the way down to 27.6 cents. So we have in the primary scenario relevant support at 33.3 cents. So there is not much more space left, and it may very well switch over to the alternative count as primary. And below that level, we have relevant support at 27.6 cents. If it makes a sustained break below 33.3, certainly the red wave count, which is the alternative, will be in control. And if it makes a sustained break below 27.6 cents, we have to prepare for new bear market lows. I think that is, how to put it really in a nutshell here about the structure, how to explain everything really in brief about the structure. Now looking at the micro count, A wave down, yeah, in this wave 2 correction, we're looking at an A wave down still that bottomed in April, a B wave as a triangle, and then a C wave to the downside. The subwave structure of this C wave is unclear. Yeah, I mean, I've made an attempt. I changed it now a couple of times because it's just not clear. I don't see this subwave structure as reliable or something. It is really difficult. Yeah, with such a long wave 1, this is completely unrealistic, I have to say. I might take it off completely. So yeah, I might take it off completely because it has become very unreliable. And really, if this is a long wave 1, then it will go down much deeper. So again, the choppy nature of this decline leaves a lot of options. This could even be an ending diagonal. It could also be that this ABC is actually a WXY, and I would have it. I would have the W where the 3 was sitting. So WXY, that's possible as well. And then we wouldn't have necessarily all the 5 waves down, because what I have labeled as a C wave would then be a Y wave, and that includes an ABC in itself. and we could now start the C wave, which would be shorter. So there's all sorts of considerations. So we really need to focus on what we see. And what I see is that we had a reaction to the golden ratio, but that reaction wasn't bullish. It was a small reaction. So it would currently prefer further declines. And next stop would be 33.3. And if we don't see a bullish reaction there, I have to switch the primary count to the alternative, or the other way around, the alternative to the primary. So switch them over. And I think the mindset needs to be, we have to assume it's coming down lower because the short-term trend is down, and we're waiting for a reaction at one of the levels here, either 36, that's still possible, or 33.3. And I will update you anyway as soon as I see something. Okay. Yeah, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.